What's up, guys? Welcome back to Wrench Capital Charts. Today we're taking a look at Digital World Acquisition Corp, ticker symbol DWAC, in anticipation of tomorrow's trading day, Wednesday, January 24th. This name has been on an absolute tear as of late, so we're going to look at it from all angles. I'm going to present both the potential bullish side and the potential bearish side so we can look at this completely unbiased and then come to a logical conclusion ourselves. Listen, this is only the second video on this branch off channel. I'm taking it back old school the way I started. The original Wrench Capital channel, I really enjoy this style. If you get value out of this style at all, please appreciate a thumbs up on the video. Helps out tremendously with the algorithm. Maybe even a subscription. I appreciate it. Let's take a look here, starting with the 1 minute chart, and we will move all the way up to the daily until we eventually finish off at the options chain. So look here, the stock up 2.13% today, relatively boring, dare I say, consolidating here in the after hours. A day like today, after we saw that early pre-market pump and fade, and then consolidation before seeing some wildness throughout the majority of the trading day here, a lot of traders and investors would look at this as a disappointment, but I'm looking at this after this massive pump of a day. Let's just zoom out and look at that day for a second. Oof, look here. From the close to yesterday's close, I mean, the stock had a 90% day. You don't see that every day, you know, to say not very much at all. Today's movement, guys, I can't stress this enough, is so incredibly powerful, even though it's only up 2.13%. Do you understand what happened today on DWAC? The stock held the $50 major psychological level that we all know is a psychological round number. Psychological levels tend to turn into effective and important technical levels, and you can see here the early stages of this almost forming actually today, which I thought was incredibly interesting. If we just zoom in on today, take a look at this. See this here? The stock rejecting off of 50 many times in pre-market, granted lower volume, but rejecting nonetheless. We come up for near tests, you know, we're around 49. Keep in mind, this is a volatile name. Holding off for the majority of the first half of the day, ripping upside through, coming back in for a beautiful couple of retests here, and bounces. It held 50 well into the after hours. It stood the test of both higher volume and lower volume, which you start getting a well-rounded view from the market like that. All volume conditions. All of a sudden, the market's telling us from a large sample size that this thing, today at least, belongs above 50. Now, you guys know I'm a 3 to 5 trading day kind of guy, so we need to clear this up and move on. Let's take a look at the 5 minute and then the 30 minute, and we'll just work up from there. Not a ton to look at here on the 5 minute, aside from, look at this beautiful ride up of those, the 9 period, the 20 period, and the 50 period EMAs yesterday. And today, they were a little bit less relevant. But let's move on here to the 30 minute. The 30 minute actually offers an interesting perspective here. You can see, essentially all week on this grind higher, this 50 period here on the 30 minute has been a highly relevant yet stable point. You can see here that it's incredibly smooth. And today, on the low of the day, a very clean test of that. Again, you guys know how I feel about TA, right? It's a self-fulfilling prophecy that's neither good nor bad. It just is. It tends to work because people believe that it works. And if you have enough eyeballs on a particular level, the more likely it is to be effective and see high volume around said level. And here, we have a very clear test and respect. Let's move on here to the 4 hour. And then we'll zoom back in a little bit. Okay, this one gives us a little bit of perspective. You can see here, you know, even a little better, big move, a little bit of consolidation. What I'm really more concerned about here, I want to look at the daily chart. This is where things start looking crazy and parabolic. And this is where I want to kind of lay out my base case, both bullish and bearish. I'm sure some of you are positioned one way, some of you the other, and I want to lay out all sides to see what I would be looking for in each case. So, as a bull, from a bullish perspective, there is one very clear thing on my mind. Can you guess what it is? $50 needs to hold. I'm a 3 to 5 day trading day kind of guy, or a 3 to 5 trading day kind of guy, I suppose. When we break a huge level here, I need to see at least 3 to 5 trading days is what I mean by that, of either treating a certain level as a new developing resistance, or claiming it, or perhaps reclaiming it as a support level. One day, a rip upside through for a single day for me is, while we saw the movement, it's almost meaningless in the grand scheme of things, because we have really yet to see a hard back test on the daily of 50. Now, intraday and heading into the after hours, we saw a double, triple bounce off of 50. It's in the early stages of potentially claiming that, but through to the end of this week, if I'm a bull, I'm looking at this with one thing in mind, and that's do not give up $50. If I'm a bear, this is incredibly simple and very similar. And when things are incredibly simple, everybody seems to be thinking the same thing when it's so easy to read, and it tends to produce the volume, and it tends to work, right? A self-fulfilling prophecy. That's why the TA and the psychological levels, they turn into technical levels. They turn into important, relevant areas to watch. If I'm a bear looking at DWAC right now, I am just like the bulls. I'm thinking one single thing. Reject 50 as hard as possible and fade back down toward 40, at least. Right? We need to establish 50 as a resistance level, and we cannot claim that. If I'm a bear looking at today's close, I'm accepting the fact that today's trading day finished in favor of the bulls. Now, listen, in typical market fashion, that only means so much in the coming trading days, right? But if I'm a bear looking at this, I'm understanding that the bulls, they won that close. They are in the early stages of potentially claiming 50 as a support, but it's gonna have to hold. Again, 3 to 5 trading days, one single day at the end of the day means nothing. Now, one more thing I just want to make sure you're absolutely aware of, and then we'll take a look at what the options traders are thinking. Well, first of all, here, take a look at volume. Very, very high as of late. Not a surprise at all, but the real thing I want to make sure you're aware of, IV is absolutely spiking. Currently at over 200%. The options traders right now need to be considering they are paying for inflated Vega contracts. That IV value, the implied volatility value priced into those contracts right now, is massive compared to the recent past. IV crush could be a real concern. Just keep that in mind. It's not necessarily the end of the world, but just to ensure that we have our helmets on, we're safe here. IV crush is something to be top of mind right now. Let's finish off here in the options chain. Look at this call to put ratio. And by the way, that sample size on DWAC, that's a nice sample size. 153,000 contracts. We can actually pull some real data out of this here today. That call to put ratio, 65.4% calls today. Look at that, nearly twice as many calls today traded compared to puts. But looking down here at that delta range, that's 0 to 20, the short-term speculators, what are they telling us? Well, the reality is, for short-term speculation, the bears are outweighing the bulls. 21,380 calls versus 35,179 puts in that short-dated, out of the money, cheap delta range of 0 to 20. Now, keep in mind, when we compare that to something like SPY, 21,000 calls, 35,000 puts, that's not a massive sample size. You could have 1 or 2 traders come in here buying 10,000 puts, and that throws off that ratio massively. We have to consider that. The smaller sample size you go in the chain, the more of a grain of salt you have to take the data. Interestingly, though, those short-term bearish speculators outweighing the short-term bullish speculators, but total calls massively outweighing total puts. So where are they coming from? Well, you can see here that there are almost no puts being traded at the 61 to 100 delta, which is actually relatively interesting. There's only 80 puts traded from 61 to 100 delta total. That's crazy. From a 61 to 100 delta on the call side, you have 12,700 from 61 to 80, and 13,147 from 81 to 100. Those are going to be those deeper in the money, higher quality, typically longer dated call options, potentially even leaps here. That's the higher quality money. So we're seeing the short-term speculative money lean a little bearish, but the long-term, slightly less speculative money is piling into the bullish side, undoubtedly so. If you got value out of this video, please subscribe to the channel. It helps out tremendously. If you want to help out with the YouTube algorithm, again, this is a brand new branch off channel. Please leave a like on the video. I appreciate it, and I'll see you in the next one.